Hi guys, Gail Sylvester here. So the announcement came. Bank of Canada raised its rate by 1/4%. Did you know it was coming? We did. We've probably talked about it too when we did your mortgage. And how is this going to impact you? What is the actual effect? So this is the biggest thing that we're hearing is that clients are really scared because once there's change, some people don't like change. And a variable rate mortgage does change, but not as often as you think. So I looked at the numbers and I was like, okay, so currently we had prime sitting at 2.45. It's going to go up to 2.7, which is that 1/4% increase. And did you know for every $100,000 you owe on your mortgage, it's equivalent to $3 a week. So take a look at what your mortgage payment is, what your mortgage amount is. So based on that, that is what you're going to see based on the impact. $3 a week, you can't even get a coffee at Starbucks for $3 a week. Like it's really minimal, but it is change. And I'm not going to downplay change. So, because some people don't like that. But if you look at the overall picture of where we are today with interest rates, we're going to look at like in the last 12 years, I've talked about this. Prime rate was at 2.5 in June of 2010. Just like for the last 2 years, it's been sitting at 2.45. And we've only seen 11 changes in the last 12 years. So now we're at our 12th change. The highest we have seen prime in those 12 years was at 3.95. So today we're at 2.7. We're still 1.25% below the highest we've ever been. Now, if your interest rate on your variable rate mortgage is at a 1% below prime, your interest rate right now will look at 1.7. If you're worried where interest rates are going, if we look at the fixed rates are above 3% today. And if you were to lock in at that like 1.3 to 1.5% higher based on security, that additional, I'm going to say $300 a month on that monthly payment is all going to go towards interest. So here's what I'm going to suggest is that if you're worried about where the payments are going, why don't you make your mortgage payments based on the fixed rates today? But don't lock in, don't convert. It's a strategy with the variable rate mortgage, and it's for the long term. We're going to see a few more fluctuations by the end of this year, but you're going to be leaps and bounds ahead if you stay in that variable rate mortgage than if you converted to the fixed rate and just put all that extra payment towards interest. Now, if we use the last couple of years in terms of a lot of fluctuation, a lot of change, and a lot of uncertainty, if you're in a fixed rate mortgage and you want to now move or you want to make any sort of changes with that mortgage, we're going to pay a higher penalty to break your contract because fixed rate penalties are based on the interest rate differentials, which is the loss of interest between your contract amount and then the closest term contract amount. And it's that loss of interest for the remainder of your term in terms of what you're going to pay for interest. But if you're on a variable rate interest, it's a 3-month interest penalty. So it's the lowest rate penalty that we can actually charge. So there's a lot of variable options because life is variable. So when you're in a variable mortgage, it gives you that fluidity that you probably need as opposed to the fixed. So if you're worried, reach out. But by all means, for every $100,000, we got $3 a week in a mortgage payment. So I'm hoping that doesn't impact you. And if it does, then we definitely need to talk because we got to talk to you about some overall cash flow because I don't want your house poor. We don't work that way. So any questions, call me, email me. We're just a call away. But at the end of the day, don't worry. Everything is okay. And we are right on plan in terms of where we thought we were going to be. All right. We'll talk to you soon.